Well, hello, 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 and welcome to the Legacy Insights podcast. And I am your host, Moving Money Mike. Hey, we have an awesome show for you tonight. I'm going to be diving deeper into the first pillar of the legacy framework. That is learn, right? So when you're learning, right, you got to know what topics and what subject matter to really tap into. And tonight's podcast, episode number 12, is the 20 IUL secrets the bank won't tell you. Isn't that something? They'll take your money, they'll make the money instead of letting you do it and get it. Listen, they would make out much better if everybody made money, right? So here we go. Listen, we're here to discuss entrepreneurship and financial strategies to guide you to your goals and dreams. Simply put, we provide insight to get your money right. Okay, we're going to be covering topics, tips, tricks, interviews, Q&A. We're going to have subject matter experts on entrepreneurs of every level and skill, every type of business, so that they can provide their paths so that you can not make any mistakes along the way, or not as many mistakes along the way, because guess what, there are no really mistakes but learning opportunities for learning, right? So there you go. So once we get that all together, I want you to consider a few things, and I touched on this back in like the first and second episodes, right? You got to ask yourself, what good is life without health? What good is health without wealth? What good is wealth without a lifestyle? And what good is a lifestyle without a legacy? These are pivotal questions that you need to ask yourself. If you're working hard, you're not living the life that you imagine yourself to be living, this is the show for you. This is where you can get those nuggets. This is where you can get a jump start on the questions and the opportunities that you can start asking about and investigating. Hit me up in the comments, sending me an email, going to the Michael.Lewis Financial Specialist to get some answers, right? To watch some videos, get some more information. Scan that QR code on my YouTube page. Take that financial information. It's going to ask you to register. Take that financial overview, learn some things, confirm some things, and grow yourself. All right, so let's keep this thing going here. Right, my goal is to help to assist you in becoming a better informed entrepreneur, individual, family person. That is the goal of this show. So it's time to get smarter. So we're going to jump right into this information. I've got my trusty show notes right here, because like I tell you, I get so excited. I sometimes I just go off on a tangent because, like, hey, there's just so much information. I'm having so much fun providing this information to you so you can get your mind and your money right. So listen, this is going to be an overview of the 20 IUL secrets the bank don't want you to know about. So I want to ask you something. What if one financial tool could protect you and your family, grow your money, give you tax-free access, and shield you from creditors? How about that, right? That's the power of an indexed universal life policy, an IUL. Guys and girls, get your pens and paper out, take these nuggets down, or hit play a number of times in this episode, because this is where the rubber meets the road. This is the information I said I'm going to start dropping, right? So that you can get your mind and your money right, building that legacy that will last for generations, right? So here we go. Let's break it down pillar by pillar. Here's some of the benefits, right? The core benefit, it has a death benefit, right? It's life insurance. So it's the cornerstone protection of your family. Let me share with you. I was talking with a young man just the other day, um, about he has two very young children, right? Young family, nice guy, hardworking, one income, right? You don't see that a lot today, and I admire this young man, right? Because he's got a stay at home wife, right? He's 26 years old, How many 26 years olds have a family and has his wife staying home to raise the babies? Two, two babies. So he's taking on the whole, responsibility of manhood. You don't hear much about that these days. So I'm just going to share with you, like me and him had a conversation because he's searching, right? He wants to keep doing the right thing and building his legacy. And he understands planting the seeds of the tree that he knew one day he will never sit in the shade of. He understood that concept when I shared that with him, right? You got to start now, the power of now, right? So I talked to him about the babies and protecting them and having them a college education already paid for before they even get out of high school, right? Because that's the key, getting started early and while you're still young. So he was like, yes, I want to get these two accounts set up for my babies. He's got a little boy, a little girl, beautiful family, and I said, okay, well, great. We could probably get them, um, $500,000 policies or $250,000 policies, whatever, that fits within your budget, and that they'll never have to worry about money again. In 20 years, you've done paying, and it just keeps growing, right? But then I asked him, I said, wait a minute, that's admirable of you, but are you protected? Do you have anything in place that is going to protect you? And he said, well, come to think of it, no. And I said, oh man, the issue is this. If you're ever on an airplane and they say, if God forbid something were to happen and those air masks drop down, what do they tell you to do? To put your mask on first, right? Because if you can't breathe, how are you going to be able to save somebody else or save your loved ones? Right. So I explained to him the importance of him having coverage because he's a single income family. I asked him, I said, simply, if something were to happen to you, what would happen to your family? How long would they be able to live, keep the same quality of life if something were to happen to you? He just thought, he stopped and he looked around and he said, Mike, he said, I never thought of that. I said, yeah, yeah. I said, typically, what you would like to do is protect yourself in enough capacity that your children, your wife, your spouse, their lifestyle would not be upset more than just losing you and being the breadwinner. See, we're the ATMs of our lives, right? And somebody's constantly swiping their card to get money out of us, right? And so those living expenses. And so we're going to get back together this weekend. Look at what he's saving, where he's currently at, because see, it's not a one size fit all type of a relationship. I got to get to know you. I got to know your goals, your dreams, your aspirations, your wants, desires for your family. Where do you see them going? Right. So that we can actually custom tailor fit you with the right equipment, the right gear, the right circumstances around your goals and dreams so that you have a better chance of winning, right? This is not a sprint, this is a marathon, right? When it comes to financial gains, right? Don't listen to gurus that get rich quick shit. Excuse me, man, but it takes me, it really peeves me when people start talking about how you can do it like this. And nah. It's the time value of money and compounding interest that pays you, right? So anyway, it's the corner life insurance is the cornerstone of your family protection. And so again, I wanted to share that story with you because it's not about me just helping you with a product or a service or a contract. No, no. I had another gentleman call me today talking to me about APR and his credit cards, right? Asking me, hey, should I take one of these interest free credit cards for 12 months so I can transfer the balance from one high interest credit card to this 0% interest card for 12 months, and then you know pay it off. Well, how should I do that? And I said, well, it depends. Well, I'm going off the topic right now because there's so many strategies that depend on your financial situation. Those situations are good if only if the full balance can be transferred to the 0% interest card and paid off within those 12 months. If you got 29% here and after 12 months you get another 29% and you ain't finished paying them off, guess what you got? You got 58% worth of interest putting foot to butt, right? Not a good place to be, right? Because you thought you was getting, it's delayed pain is what that is, right? So you get to delay the pain of that high interest for 12 months. But if you can't pay off at least one of those balances, hopefully both within that 12-month period, you're in trouble. So let's keep this thing moving. The second core benefit of an IUL is cash accumulation, right? Growth value inside the policy. So that's really what it's all about. It's called living benefits, right? So you get the death benefit, you get the core cash accumulation in that policy, and it's tax deferred as well. The growth, the growth and the gains without any without early tax hits. So what happens is as you get that money, paying that premium, then you pay the cost of insurance, and then some of that cost of insurance goes to the cash accumulation portion of the policy. Um, that will grow tax deferred and tax free in the IUL, and then eventually you will be able to access that money. So we're going to say that's how that really works, right? So um, there's upside potential, growth potential, because it participates in the markets, right? And the great thing about this product is you can actually participate what indices you participate within the product. Okay, so that's a really good thing, right? So you got the it's the three markets. You got the S&P 500. You've got the let me get it. You got the S&P, the Hop saying, what is it? Oh, I'm sorry. I can't. It just totally left my mind. That happens sometimes, y'all. I'm sorry. It's just so much going on. But it's the three indices that put, maybe hopefully it'll pop back in my head before this is all over, right? Then so it participates in the market, and the global market. There you go. The global market actually performs better than the S&P. So that's one of the places where you'll put a lot of the growth in the money into that portion of it. Then you get the protection against market loss, right? So protection against market loss means that whenever the market goes down, you don't lose any money. So think about that, right? In a variable market, it's like a EKG machine. The market goes up, the market comes down. So when the market goes up, guess what? You're making money, right? No brainer. But when the market comes down, you lose that money. And what most people don't account for is the losses. They always saying, "Oh, I got this. I got 10% return." Well, what did you lose to? Because that's part of the equation as well, right? It's not always winning, right? It's the losses in that variable market. But what if you could participate in the market that locks in at the top of the market, and whenever it decides to go down, your money don't go anywhere either. It don't go down with it because it has a 0% floor, right? How about that? So that means you could never lose. That's what an IUL could do in the protection against market loss. Then there's annual reset position, because that means it locks in the gain each year permanently. So whatever you gain in after the second year, because the first year is flat. The first year is flat. The second year is where you start seeing your gains coming in, right? It's just how it's done, people, right? It's just how it's done. right? So like when those gurus start telling you you can make money and take out this, stop it, stop it. Right? It doesn't work that way, right? So that second year comes around, and it starts putting money in there, and it starts to growing because of the cash accumulation, and the compounding interest starts to kick it in. Then it starts to really rolling, right? And then it's like a snowball. It keeps going, right? Then there's tax-free access via loans. You can borrow against your policy and no tax liability. Now, let me tell you how this works. A lot of people will tell you, oh, get an IUL, get an IUL. You can borrow against the death benefit. No, you cannot borrow against the death benefit, right? You can only borrow against the cash accumulation and the cash growth that's in the policy, right? You cannot borrow against the death benefit. So if you take out $100,000 policy, right, and you overfund that policy, which because that's the actual technique and strategy is to purchase a policy and overfund the premium. So if you have a premium of $100, you want to put in $150 or $200. That's overfunding it so that you get the power of the compounding interest in the growth on the back end. And that extra money above the cost of insurance in the cash value is what you can borrow. So the more you slap in there is the more power you get from the compounding interest over time. So the key is not to put it in there and pull it right out because you're not going to see it, right? So don't let people tell you that that's what you can do because that's not how it works, okay? Um, so that is it. So one of the key takeaways here is even before we even go any further, right? These 7 features alone put you of the IUL put you way ahead of any other traditional products and services that are out there. So that is the first thing that I need you all to understand here, right? Don't let people tell you that you can do something without researching it. So I'm telling you this so that you and I, like I said, I hope that you're writing some of this stuff down, right? And so that you can go investigate on your own, right? Because see, my job is to to be the informant, right? Bring you the message, right? And once I bring you the message, now it's up to you to do your investigation and then say, you know what, that brother is dropping some real knowledge, right? Because I got more for you. I got more for you. So I tell you what, go to Legacy Insights podcast on YouTube, hit that subscribe button, drop some comments in the comments area right there. Tell me what you're liking about the show. Tell me what it is you'd like me more to talk more about, right? Because this is your show. This is how we do it here, providing the nuggets to keep you moving, right? So let's continue with the information. All right. So not only do we have those 7 core benefits that are better than most other products and services that you're going to come about anyway, right? There is some living benefits. Now, this says that this is not your grandparents' policies. All right, I'm going to say it again. This is not your grandparents' policy. When I say to you that it has living benefits, that means you don't have to die before you can benefit from your investment in yourself and for your family's security, right? So let me tell you how this works. The living benefits are just what I say they are. They provide long-term care. The stats for long-term care, the need for long-term care are growing exponentially as we speak. People are living longer, and the advancements in medicine mean that you're going to live a lot longer than your parents and your grandparents did, right? That's at least by 5 to 10 years longer. And who's going to fund that if you're retired? And then if you are retired, do you have 1.5, $2.5 million there to keep your lifestyle if medical emergency were to happen? Medical emergencies are number one reasons why people go financially broke in this country is medical expenses, right? If you had a home, you got to sell it to get you've heard the horror stories, right? You've heard the horror stories. Unfortunately, an aunt of mine, she got sick, didn't have real long-term care. She had to sell her house and pay for the home care. that she was receiving, right? It's just what it is. It's the system. So knowledge is power, but applied knowledge is powerful. So um, to continue, long-term care, chronic critical illness benefits, right? So that long-term care in this policy is basically a rider that can help to cover those costs of LTC coverage, right? So you actually can get a long-term care benefit uh, rider in the policy for pennies on the dollar. Like a lot of times, I used to work for Banker's Life, Colonial Penn. You know, right? The guy was that there's three things that you want to know about: price, price, and price. Right? Well, believe me, those prices were pretty hard because I remember making those phone calls and telling elderly people that the long-term policy premium was $300 a month on a fixed income, $400 a month on a fixed income, because guess what? They're sick. They got some medical issues. That was the hardest thing I had to do, but I couldn't do it. So I got out of there, right? And I found this awesome company that I work with now that has these products and services that really can help people at a premium, right? So that long-term care, it got critical illness benefits, accelerated death benefits if you're severely ill, right? Critical illness coverage for heart attack, stroke, and cancer. You're talking about critical illness, and then of course terminal, right? If you get terminally ill, um, the benefits are expedited, right? So that you can actually use them while you're still here, so that your family doesn't have to bear the burden of the expenses, right? The policy, the long-term care will kick in and pay those expenses. That's what this really about. So it's also a continued investment if disabled, right? There's a waiver of premium, keeps the policy funded. So if you get hurt and you have that waiver of premium in there, actually it allows you to not have to pay, because there's going to be some cash in there that's going to pay the lowest portion of the premium, because they have flexible premiums, right? Because this is a really great program, right? It allows for the minimum amount of premium to be paid to keep the policies in force, right? So I'm telling you, this is an awesome, awesome program. So the key takeaway here is, unlike many retirement tools, the IUL supports you while you're alive, not just when you pass away. Hey, I'm telling you, when I say that this is the cornerstone of your financial legacy in building a legacy that will stand forever, this is the core. Now, a lot of the wealthy, they buy these policies by the millions in dollars, and they overfund them. I was actually at a convention 2 to 3 years ago, and this woman got on stage. She was one of the executives in the business in our company, and she actually said that her grandchildren and her future grandchildren were already millionaires, because she had set it up so that as things were to happen in life, as they do, they would be taken care of. Now, she had already been successful, so her beneficiaries were already millionaires, right? And that's how this happens. So when you see families and they're doing well and they're living in these big mansions, and you see what's happening with, and you wonder, like, where do you get all this money from? Well, it's good financial planning. It's not that they all made these successful businesses. No, there was good financial planning, planting those seeds early enough so that the people that you're actually witnessing are living under that shade of that tree that was planted many years ago. So you get if you want to break the cycle of paycheck to paycheck, this is the place to do it. Go to Legacy Insights Podcast, hit that subscribe button, tap in with me. Okay, so there's flexibility and freedom also tied up in this program. So there's no minimum age or income requirement. Even children can have policies. And I just told you about the young man that I'm going to be meeting with him come up this week to sit down with him, get him situated so that he can his family is taken care of, and then we can look at providing his children with college funds and life planning through these policies and contracts. There's no mandatory distributions, meaning like IRAs and 401ks. You're not forced to withdraw your money. This is the permanent life policy in which your money can sit there for perpetuity, or into the beneficiaries, right? You can access it at any time. I had some work to do in my home, um, you know, and like many of us do, or homeowners, or you, car repairs or life emergencies come up, and you have that cash accumulation in there, right? I called them up. I said I needed $10,000, right? I didn't have to say please. I just called up the office and I said I need the 10K, and a check came in the mail, right? It's not like a 401k where you got to have a hardship. It's not like that. It's your money. Ease of access. Within 48 to 72 hours, there's a check in the mail, right? And then guess what? Because of the way that it's been dispersed, there's no taxes on it, right? Because guess what? It's tax deferred, it's tax free gains, right? It's in life insurance. Okay, I'm telling you something here. IRC 7702. Oh man, I'm dropping nuggets all over this place. You better bend over and pick them up. Right? You better bend over and pick them up. Right? I'm giving it away. I'm giving it away. Right? So there's no taxation on Social Security benefits. Right? So your IUL withdrawals loans don't affect your benefits. Guess what? And it doesn't affect college tuition either. Say you've got 401k and bank accounts and all these other vehicles and IRA. Listen, guess what? When you go to fill out college loan applications, you got to disclose all that. And guess what they're going to do? As you tell them how much you got and how much you got and how good you're doing and you prepared this, guess what? That financial aid is going to go bloop, 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 bloop. It's going to start shrinking because they're going to want you to tap into that before they loan money. And matter of fact, I just heard that the and it was we had a tax seminar just the other day, and I wish everybody could have been on it. I'm going to have to get those notes together and bring those to the show as well, right? But the college loans now used to be unlimited, right? You could borrow as much as you could, as you could afford to borrow. They stopped that because people ain't paying them back. People are not paying back the loans, right? So what the banks they gotta make money. So if they're giving you $100,000, $200,000 to get medical degrees, guess what? And they ain't getting their money back. They're losing money. Then banks are not. They're just as bad as the damn casinos, right? So they just stopped that. So they're going to be stopping that come 2026, I believe, right? So I got to get some more data, but please go check it out for yourself. Don't just take my word, right? My job is to inform you. Your job is to confirm what I'm saying, right? Then you tap back in with me, then we could do some business, right? So there you go. But if you with this programs, it doesn't affect college financial aid, not like 529s or brokerage accounts. I just said that, right? Okay. Accurate return figures, transparent performance versus smoke and mirrors, right? So when you start talking to your advisors and your insurance professional and your tax professionals, and they're saying, oh, percentage of this and a percentage of that, well, what do you mean? You got to ask them. It's your money. Can you please explain that? Right? With these products and services, they have what they call illustrations that are printed out that are conservative on their projections so that we do not overstate the power and the gain that they're going to perform for you. So I don't have the chart here, but I do have a chart that says over the last 25 years, the products and services have averaged between 8 and 9 point something percent return annually. That's average. That's average for the last 25, 30 plus years, from 20 to 2024. Yeah, 2050, 1950 to 2025 or something like that. Yeah, 70 some years, 70 some years, right? Is when that took place. And it's been happening consistently over the last 70 some years. So we have to, by statute and regulation, have those illustrations shown to you and explained to you so that you know exactly what's happening with your money on the gains, and where it sits, right? So the key takeaway for this is, um, it offers freedom in timing, and use. Stay in control and not let your favorite uncle, Uncle Sam, have more of your money. Because guess what? The quickest way to get a raise is to lower your tax burden, right? As everybody's talking about it, but if you don't know how to do it, what good is it, right? You could talk about it all you want, but if you don't have the specifics, listen, you still lost, right? We did an awesome tax mitigation webinar this past Saturday. I am definitely going to have to tap into that so that we can share that with you, and you can take that to the bank as well. All right, so estate and asset protection. This product and services avoids probate. Now they're going to check, because it's just part of the court system. So when people say it avoids probate, it doesn't mean the judge is not going to check. Oh, he's going to check, because everybody's trying to get to it, right? Everybody's trying to put their hand in the kitty, right? But because of the way it's set up, they're going to check and realize that it's locked tight. There's nobody getting into it, right? Because it avoids it. It's quick, direct payout to beneficiaries. So, hey, that's just how it works. Protection from lawsuits. In many states, cash value shielded from creditors, right? So there you go. So if all you out there are wondering how not to shield yourself, I'll put it that way. Put it in one of these policies. You can't be sued for it. It's life insurance. So if you start a policy and you put all your money in there, there's limits to how much you can put in there. So don't get greedy, right? There are limits, but they will tell you, right? Because it's called a modified endowment contract if you put too much money into it, right? But at the time of setup, in the initiation of the contracts, you will know what your contribution limits are. And so, because it's a time over time vehicle, it's a money over time vehicle. It's not where something you can just, you can roll some stuff over into it, right? But it's called a 529. No, I'm sorry, it's not a 529. It's called a it's a rollover. When you do a rollover, and you could roll over money into it from the stock plan, all that kind of stuff. You could do that. And so that's one way of getting a lot of your money into a policy. But you just can't just take a whole bunch of money and say, "Oh, I'm getting divorced. I'm hiding this money in a policy." You can put some of it away, but you ain't gonna be able to do it all, and not in the one anyway, right? So it protects you from lawsuits. It protects you from creditors because it's in a life insurance policy. So the IUL isn't just wealth growth; it's wealth protection, right? So I'm trying to drive this home for all of you, for you to understand that this is the Swiss knife of financial freedom. It's the Swiss knife of financial strategy, right? It's got all these gadgets that you can actually use to bring yourself to a better place in the financial arena. So let's keep this thing moving. Okay. All right. I just want to just say that we have really, really touched on quite a bit tonight, right? This is some awesome information. This has been really, really good stuff here. So, as I'm going to say, um, you know, we covered the core, right? What it could do, like the seven benefits up front, right? We covered all that. Let's see, death benefit, cash accumulation, tax deferred growth, upside growth potential, protection against market loss, annual reset provision where you're locking your gains annually, and tax-free access via loans. Right, you can borrow against your policy with no tax liability. Right, so that's the core. Then you got the living benefits where you got your long-term care, chronic, and terminal illness coverages wrapped up for pennies on the dollar in that policy. And then you got the flexibility of paying premium, whether it's the full premium or overfunding or just the cost of insurance if something were to have happened to you because of disability, disability waivers, right? And then the overall protection because it protects you against lawsuits, it protects you against life's ups and downs, it protects you against market loss. It's just all around protection. It is truly the cornerstone of your financial legacy, right? So the earlier you start, the more powerful these advantages become. So listen, it's called the time value of money. In the true power of compounding interest is really where you're going to get the benefit of these products. So my call to action for you is, first of all, go to the Legacy Insights podcast on YouTube. Hit the subscribe button at Legacy Insights Podcast. Hit that QR code. Scan that QR code. Go into that information and put in your name and your email. Get registered. Take the financial overview. Get that information. Confirm the information with you. Learn some more. Go to michael.lewisfinancialspecialist.com so that you can view the website, check out some other videos, info videos there on products and services and how you can get your mind and your money right. Okay. Then I want you to review your financial plan. If you do not have a financial plan, hit me up in the comments. Send me a message, right? Tell me that you want to hook up and schedule something. Matter of fact, when you scan that QR code, you're going to be asked, would you like to have a meeting, right, with me? Hey, I'll be more than happy to sit down with you. No charge at all, right? What I do is of no cost to you, right? What I do is no cost to you. So me giving you these nuggets free of charge. Me sitting down with you one on one, you and your family, no cost. Hit me up. I'm telling you, I'm here for you. Hit me up, right? I'll explain it all to you. I'll give you a financial plan. We'll look at what you're doing, how you're doing it. We'll make a strategy together, right? This is me giving back to you, right? Don't waste it. Don't waste it, right? I'm paying it forward, right? So, you're going to review your financial plan. You're going to talk to me, and if you don't want to talk to me, talk to your financial professional. Ask him some of these questions. And if he don't got an answer for you, fire him. Right? And I don't mean to be rude, but if he can't help you with your money, what you paying him for? Right? If he can't help you to grow your money, what are you paying him for? If he can't instruct you, teach you, help you to understand where your money's at and what it's doing and where it's allocated and how it's working for you, what are you paying them for? Come on, people. This is 2025. This ain't the 1900s anymore, right? This people got to step it up here. So look, you talk to that licensed professional to see if this IUL fits for you. If they don't know anything about it, reach out to me, right? I just gave you 20 reasons why you should be looking into this product and service. And this is just an overview, right? There's a lot more to it. There's a lot more to it, right? In definition of what I broke down. I just gave you the light version of it, right? There's a lot more in the definitions. So, and then I want you to share this episode with someone who needs to be protected, okay, and grow their legacy, right? Because what's the sense of having good information and keeping it to yourself, right? You want to share this. I want to share this with you. I want to share it with your loved ones. I want to share it with your friends or your family, right? Your neighbors, right? They deserve to have an opportunity to grow. We're in the age of the have and the have-nots. No one's coming to save us. It's up to us to get that information and take it and put it to action. So listen. So your family's financial safety and freedom aren't accidental. They're designed. The IUL might just be the blueprint you've been searching for. My name is Moving Money Mike. It has been truly, truly an honor to come to you tonight and share this information, this powerful information on the 20 advantages of the IUL, the secrets that the bank won't tell you. Man, you know why they won't tell you this? Because you won't need them. You don't need a bank. The only reason you need a bank is to have a checking account to pay your bills. You can manage your own money. You don't need them. This is where you need to be putting your money, right? In an investment vehicle that's going to pay you, protect you against downside protection potential, right? Continued tax deferred growth. I just can't. I'll have a whole nother show going back over it again, right? Hit the like button, hit the subscribe, tap in with Moving Money Mike. I am your host of the Legacy Insights podcast, and I want to thank you. Thank you so much for the privilege of your time. And I'm out. Thank you very much. Hit me in the next episode. We'll be covering, I believe it's going to be annuities, right? So we're going to touch on that. All right. See you in the next episode.